Hello, Maverick Traders. This is Rob Reinhold. I'm joined by Mr. Darren Fisher, and let's jump into last week. Now, last week was a crazy week because we broke our streak of 7 consecutive down weeks, which was the longest streak, I think, since 2001. And we put in a huge rally, markets up about 6%. And we're going to take a look at the charts here in a second, but the technicals of the bearish market really kind of broke this week, and we'll take a look at it. But I think if you are still bearish, I think you need to take a look at what's happened in the technicals and really reevaluate if you want to stay all that bearish. We did get some earnings relief after last week's Target and Walmart misses, which really took the market down, really probably took a bottom that should have happened 2 weeks ago and put some pressure under it, because this bottom was not a clean bottom. In February, we got a clean bottom where it fell hard and then it bounced back very sharply, a V bottom. We did not get that. It was a very, very messy bottom here, but we did get that bottom. And this week, we got retailers that came out and said really good news. Macy's being one of them, other stores. So Dick's Sporting Goods was one. Actually, they said terrible things, but their stock jumped up. People are now buying bad news, which is one of the hallmarks of we are at a temporary bottom in the market. The economic reports were so-so. So we got new home sales plummeted. This was a huge miss. It was really surprising how quickly real estate has turned down. We got durable goods orders, plus 0.4, decent but below expectations. And then this is probably the biggest news we got on Friday, was that the PCE price index, which is the index that the Federal Open Market Committee likes to use, came in as expected, but the year over year was less than last month. So the question of, is inflation peaking or has it peaked? People are now starting to believe that premise. Darren, what do you think about that question? Has inflation peaked?
I don't think inflation's peaked. I think we've still got a lot of pain out there. There's so much stuff that is trying to sift through the chain of the economy that I think this looks to me like a momentary down blip. I mean, you got to look. Inflation is still rising. It's just saying, oh, it's not rising as fast. Well, that still doesn't help the poor family that's got to commute an hour into work every day and has to, they're making some really tough choices about, when do I fill up the car? How do I fill up the car? What am I going to cut out so that I can fill up this car to go to this job and then go to the store? The prices are still rising. And for people to say, well, it's good news, they're just not rising as fast. That they've risen so fast. There's a lot of people that are out there that are hurting because of this. I think it gets to the point where we start to see that demand destruction, and once we start to see demand destruction, that's when we're going to have an unemployment issue. I think there. You and I were talking a little bit about this beforehand. That's the road I see going down, and I could be completely wrong. I hope I'm wrong, but that's just what I'm seeing. I've got no other corollaries for this current state that the country's in than the late 1970s and the early 80s. And that's that's where this is shaping up to go. And I sincerely hope I'm wrong.
Well, the whole question of has inflation peaked? It's kind of a dumb premise, because peaking means it just isn't getting a lot worse. We could easily have seen the peak, but that means it's 6.3%. That's not good. It doesn't mean that it's going to go back down to 3%. We could stay up there. So we'll have to see. I think inflation definitely stays high throughout the summer, and we'll have to see what happens in the fall. But let's take a look at all those charts, because that's really what I wanted to get into today, was that the charts. Let's take a look at the S&P. Now, we had, again, some pretty good signals here. We got down move here, was ended. And then we got another signal here. We have gone up through this neckline. So this point right here is called the neckline. And again, we hit the same place twice. So looking at a potential double bottom here. But this neckline is a really key place. We blew through that today. Absolutely blew through that. And we're now trading up here into, well past these lows in this area. There's a lot of momentum to the upside here. And I really don't see anything until like the 50-day moving average to the upside that's going to stop this market. Now look, this kind of a day on Friday, there was probably a lot of short covering happening today. If we quickly drop back down below this neckline, then I think you have to discount Friday's move and say, oh, okay, well, maybe we are still in a bear market. But if we get any continued movement to the upside, I think it is just a sign that it wants to get to that 50-period moving average. If we take a look at the Qs, same thing. We've broken up above that neckline. The Qs have some resistance up here at 320, but 327 is going to be where this 50-period moving average is. Now, we could go all the way up there and still be in a very bearish market. We did pierce above it here back in March and April, only to resume the downtrend. We could easily get another move like this to the upside. So we are now going into the summer, going into summer trading where it's typically a little bit less volatile, a little bit less volume. And I think that we have this big pop up to these areas. And then I think you can basically say, put a line here, put a line there, and say, that's where we're likely to trade for the rest of the summer. Darren, what are your thoughts?
Yeah, that's definitely a thesis right there. I think I think this summer, though, has the potential, if we do get a down move, I totally agree with you, up into the 50 period moving average. I think that's where we're going to hit a lot of resistance, and it depends if we can hold it, if we fall back down. But I think we hit that those lows again. I think we go through them. And I don't think it's going to be news related. I think it's just going to be strictly momentum. The question in my mind right now is, as fast as we've come, 7% in the NASDAQ, 6.5% in the spiders, to do so in 1 week, to really do so over 3 days, how much gas is left in the tank? That's my question right there. And what happens when we run out? Do we coast, or do we slide back down the hill? And that's the question on everyone's mind that we're looking for right here. Where do we go? But yeah, you could make me the case that we're going to be in a trading range, an 8%, 10% trading range for the rest of the summer. And historically, I can't discount that.
Great analysis, Darren. And let's take a look at the VIX. The VIX is heading down back into the mid-20s. We have been elevated. And if you take a look, 26 was a key area where we bounced off that twice. If we can get down below this 26, that would be another confirmation that this rally does have some more legs to go. As volatility starts to come out of this market, people start to feel a little bit more bullish. So ultimately, this week, we're looking at an up week, most likely. However, we do have to understand that we just did 6% in 3 days. As Darren said, how much gas is left in the tank? We just sprinted very, very quickly. It would not surprise me at all if this week is a little messy. It's a little bit, it doesn't really go anywhere. But I think as long as we hold that neckline, I think we're probably going to see some higher highs after this. So next week, we've got the looking like a tradable rally here. And the 50-period moving average is what we are kind of targeting as the next level here. Monday, the equities are closed in the United States for Memorial Day, but Forex and crypto is still open. Overseas markets are still open. And so what's going to happen is whatever happens in those markets, it's going to get adjusted in Tuesday's opening price. So let's say that, Asia falls 2%, Europe falls 2% on Monday, and then on Tuesday, they're flat. Well, we're going to be down 1.5%, 2% to be adjusted for what happens in those markets out there. Just a quick note on cryptos. Cryptos are super, super bearish right now. They are in free fall. We've been telling our Forex and crypto traders, don't try to catch a falling knife. These things are in free fall. Ever since Luna went to zero, which really hurt and surprised a lot of people. I think people are looking at these digital coins that they had all this faith in saying, maybe I don't have as much faith. Let these things bottom out. Let these things bottom out. There's no reason at all to go in trying to buy crypto and be a hero here.
Don't try to catch a falling knife is a good analogy, but I think a better one as far as it goes in cryptos is don't stand under a falling safe. I mean, there's some Bugs Bunny type action going on here. If you tried to catch a bottom in this, you could end up a hole in the pavement with a safe on top of you like there. So yeah, definitely be wary of those.
Absolutely. And I mean, that's a great analogy. Coin like Solana fell 30% last week. People thought, 30% off. What a great discount. It fell another 30% this week. So they are in free fall. Stay away. This week, we've got ISM manufacturing on Wednesday, and it's the first week of the month. So we've got the U.S. payrolls report on Friday. We were at a -2 last week, and we definitely have to upgrade this market from a -2 up to something else. However, Darren and I actually had a disagreement on this. And again, it wasn't a yelling match, but we're looking at, okay, how is this going to be scored? Now, there's no question that we're above the 20-day moving average. There's no question. And there's no question that we're below the 50. So above +1, below -1, those cancel each other out. The big question is, how would you score the slope? So when we're looking at the slope here, I'm looking at this 20-period moving average, and I'm saying to myself, I no longer see this as sloping downward. To me, it's sloping sideways. Now, fully understand that if we get a down move on Tuesday, this line will change. And this is why looking back in the past at technical analysis, it fools you to thinking, there was a very clear signal there. There's a lot of unclear signals that are basically unwound when more price action comes in. This line will actually be sloping lower on Tuesday, and in the future, when you look back, you'll say, there was never a turn. It's very early to call this turn. I would say, you know what? I like this flat. I would give this market a 0. Darren said, hey, you know what? I need to see more than 1 day of flattening. Would you say that I described our disagreement pretty accurately?
Yeah, you're absolutely right. That 20-period moving average could, especially if it could flatten out, but I don't see it going up anytime soon. So, I mean, you and I are both in agreement. We're going to have up week this week, and I think it's probably going to, it's probably going to be a +2. The question is our monthly outlook. I mean, going from very, very bearish to not so bearish. How not so bearish do we want to be? And that's the thing. I would be comfortable more with on a monthly outlook, the -1, even -1.5. I'm happy to split the difference with you, though.
So it sounds like Darren and I are both short-term optimistic and long-term cautious. Now, that is actually a joke we have at Maverick, and it's something that's always bothered me and a lot of other traders, is that they'll get people on CNBC that, this person is with JP Morgan and they're the head of investment and they've been in the business for 40 years. What do you think is going to happen? Well, short-term, I'm cautious, but long-term, I'm bullish. And I think to myself, this guy's getting paid to have that outlook. Short-term, I have no idea what's going on, but long-term, stocks go up in value. Yeah, I know. Anyone knows that. That is the dumbest thing. So now, whenever you want to just say something like you don't really know, you just say short-term cautious, long-term bullish. That means that you don't know. We're going to do the opposite. Short-term bullish, long-term cautious. That's our outlook at the moment here. So we do think there's a little bit more left here in this rally, but by no means are we bullish. No means whatsoever. We're just no longer super bearish. And until the market tells us where to go, that's going to be where we stay. Let's take a look at some sectors.
Yeah, the sectors were pretty interesting, if you looked at them, and you can see across the board, just massively up. I mean, you've got consumer up there plus, 9.5%. I mean, that's huge. You don't see sectors doing that. You've got also you've got energy up another 8.25%. So I mean, that's looking good right there. Financials did really well. Industrials did very well. And those are all, I mean, just nearly double-digit gains for all these sectors. It's doing good. And communication services and real estate, I think, communication services definitely. When your lowest performing ones are only up, 3.5%, 3.25%, you know that it was a strong market. I mean, I was looking, it was a little iffy. It was touch and go Monday and Tuesday, but come Wednesday, I had to go look to find my face because that market would have ripped it off. And that's the type of action you do see in these bull markets, these bear markets, where you're to the upside extreme, almost to the point of being overbought. But then you see what happens there, and it's just everything looked great across the board. Everything caught a bid. So let's take a look at utilities first, and then individual sectors here. Excellent behavior from utilities. I'm at a +2 on utilities, and I usually don't get too excited about doing that, but you see, I mean, this started the rally Monday before when everything else was looking kind of iffy. Tuesday had a great day, and then Friday was another great day here. So for whatever reason, I don't care. There's money going into utilities. Let's take advantage of it and just be on the bull side of that. Communication services, like I said, not a very well performing sector. When you took a look at it, it mirrored the market action. It just didn't mirror it to the degree that a lot of other sectors did. Wednesday, Thursday, Friday were looking really good, but this thing barely had the oomph to get over its 20-period moving average. So I think there is some upside here. I just don't think it's going to go as fast as the others. So I'm at a +1 on communication services. Real estate's another one that I'm with there. It's coming up. I see resistance at 45 from the market action that we had before. I think there's a little more gas in this, just not a whole lot. I'm at a +1 on real estate, and we'll see where it goes. It had some decent week, but you can see the volume was really anemic for this rally, and not nearly as much as the volume to the downside was. So we'll see where this goes. Mildly bullish on real estate. Industrials is another one that, this came really hard. You've had 2 days where it gapped up. And so I'm at a +1 right there. I mean, you had a gap up on Wednesday. You had another gap up on Thursday. It just kept going up. You could make me the case that, hey, this is honest, true strength, Darren. I think we're going to get up there. And it's like, okay, you make me the case. But I think this is one of the ones we've expended so much energy in such a short period of time, especially with this. Is there anything more to give in real estate? So I think we do go a little bit to the upside, but just not a whole lot. I'm at a +1 on industrials right there. Healthcare, though, is a little bit different story. Healthcare was looking really good. This almost reclaimed its 50-period moving average. I mean, that's some huge strength right there. I mean, you look at the volume on Friday, better than you look at how many green candles we've had in the past 2 weeks compared to everything else. Healthcare is catching a bid, and a lot of people like it, nearly what we would traditionally call in bullish territory above that 50-period moving average. So I'm at a +2. I think healthcare has got some legs to it. And I think if anything reclaims its 50, I mean, that's a no-brainer. It's going to be healthcare that reclaims it before anything else does. Like a lot of good names in there. Financials, still going to be bullish. But again, this is the same, that I was looking at in industrials. It's come so far. It's come so fast. How much gas is left in the tank? It looks like we've got resistance at the 36 level right there, or you even say right where we're at right now, within 50 cents. Nice little band of resistance back from looks like January there. How much more can it give? So I think we get a little bit more. Then you've also got the 50-period moving average that's coming up there at the 36. I think that's probably a likely place to that we stall out for a little bit. So +1 on financials. Consumer. Even though we were up 9.5%, I'm at a 0. I think consumers, given all that it can give in the short term, we've got some minor resistance of just about where we're at right there. You could go up to the 150 level, but I'm looking right, from 2-3 weeks ago, those two red candles right there. That's, I think, where we're looking at seeing some risk, and we're just right there. So I might be right, I might be wrong. Don't have a lot of faith in consumer right now. So just going to call that a 0. Tech, another one, it's come really hard. It's had a more stable price action, but you take a look at, we're kind of right in that band of resistance from where we were about a month ago. just at that 140 level. We're at 141 right now. So again, this has got some room to go, but I just think it loses some velocity even if it drifts up to the upside. So I think that tech for me is at a +1. Basic materials looking a lot better than what they were before. This has actually reclaimed its 50. It has done so handily on decent volume here. So I'm at a +2 on materials. This is one that I wanted to play wait and see on, and it's shown me that that's the case. Now, here's the caveat here. You take a look at that 90, 91 area up there, and you take a look down at the 80 area, we might be range bound for the next 3 months. And that's a complete possibility right there. Is there going to be something that gets us some additional movement to the upside? I don't know. But I think this one to me, just looking at the chart, has the greatest potential to just be range bound. Yeah, it's a decent sized range, about 12, 13% range, but I don't think we're going to see a lot of nice trending movements in materials at this point. Energy, though, again, this has been the darling of investors for a long time. I'm at a +2. I mean, you can see we occasionally get these almost parabolic moves. They come back in a nice orderly manner to the 20 or the 50. And then we're off to the races again. This is something where we've made so much money in energy. Sometimes it's hard to keep going back to that well. To tell you what, keep going back to that well until it dries up, because this has been the gift that's kept on giving for the entire year. So just keep going in energy until it doesn't look good anymore. This one looks really good to me. All right, let's look at the comparison where we've got everything in all the different sectors. We've got consumer, they're at 0. They're the weakest one out there. And when 0 is weakest, you look for sideways stuff in that one. We've got 6. We've got 6 sectors in +1, and this is, I'm going to readily admit this is my own personal bias. I think we do have some upside. I just don't think we get there very soon because we expended so much energy this last week. But communication services, tech, materials, financials, industrials, and real estate, all looking, pretty good, in that +1. Utilities, healthcare, and energy, they're all for me a +2. And that's where we're looking for a lot of our bullish trades. So speaking of some trades, let's take a look at some potential trades that we can look at going next week. Now in utilities, last week we were long AEP, and that performed nicely for us. Not as well as the rest of the utility sector, but it was still up 3.88%. So if you're in that trade, congratulations, that looked pretty good. This week, we're looking at Vistra Energy, VST. This is a nice high base. You can see we've made those swing highs in about the same area for the past 2 times right there. So we're a little bit of resistance, but here's the thing. The more you butt your head, the more the price actually butts its head against something, the greater the possibility that it breaks through. So there's 2 ways you can play this. You can either do a targeted butterfly if you don't want to be up there with 27 as your midpoint. That's about where resistance is going to be, which I think is a good place to be. It gets up there, it breaks through. You've made your target. Go ahead and get that one. You've got a little bit of space on the other side as well for a nice profit area. If you don't want to do that, the other thing you do is just June expiration 26, 27, bull call right there. Play it for $1. If you can get into it for 40 cents, 45 cents, then that's a decent trade to be in right there. So Vistra Energy, nice high base, little $1 trade right there. And the communication services, we're pretty happy about this one. Last week we were long NetEase, and NetEase was up 7.36%. So if you're in that trade, again, pat yourself on the back. Just watch where it's going to go. There's a lot of volatility in NetEase. This is, and especially with communication services being one of the weaker sectors, you might want to ring the register on it when it's pretty good. T-Mobile is what we're looking at this week. This is in a nice, long-term high base, about a month and a half high base right there. Just right at the between the 120 and the 135 level is what I'd call that, and it's had some really good action. You can also draw that flag pattern right there. We've broken through that, on Monday, and so where do we go? I think the price indications say we go north of 135. So where do you want to do? There's going to have some resistance. So I think you go out to June, buy that 130, and then short this Friday's 135 against it. Give it a week. You're going to be pretty close to at the money on that 135. So you're going to pull in a really good premium. but that's also where resistance is. So reevaluate the trade next Friday, collect some premium, and see if you want to keep those long calls. But I think this is a really good looking trade, for even in comm services, this is a really good looking trade for a week. And you can see T-Mobile hasn't cared what the rest of the sector's done. They've been performing fairly well. So last week in healthcare, we had Medtronic, MDT. We were going to play that one sideways. And this one, I think, came in, depending on the strikes that you sold on that butterfly, I think this came in pretty good. So Medtronic was down 3.36%. So check your strikes, but I think that was about the target that we were looking for in that butterfly. So we think that came in pretty good as well. This week, we're looking at Agilent. Symbol for that is A. We're just going to call this a first stage uptrend. Okay, you've had that really long 6-month plus downtrend right there, and it's just been going and going and going, and it put it a bottom at about the 114, 115 level, and has done nothing but catch a bid for the last nearly month right there. You can see it regained its 20-period moving average and held it, and it's very good to see. And then today it reclaimed its 50 as well. So this is one we're going to call it a first stage uptrend, and this is one that you could probably go out and hold for a while. Then if you want to do that, you're going to play those. You can either play the June 10th. So give yourself 2 weeks, 130, 135 bull call if you just want to be in and out and not worry about it. Or the one that I would actually be looking at here is going out to July of all things. So this is going to be about a 7-week trade, and go long those 125 calls. I think if the uptrend can hold for this, I think you could really be rewarded on that one. If you want to size yourself for max loss, I don't think that's a bad idea. But you could up there at 138 level. That's a perfectly good initial price target. Take a look at it from there.
I agree with Darren on the industrial sector that we had a nice run, but it's probably, again, used up a lot of its energy. That being said, we had SWK, which is Stanley Black & Decker, last week. On the short side, it was up 2.8%. So again, we always like it when our bearish stuff goes lower, but only up 2.8% when the rest of the market was up 6%. That is showing underperformance. And if you've got more time on your trade, then I think you stick with that trade, because this one it was underperforming. This week, we've got Masco on the high base. And let's take a look at just the damage that's been done to this one. 68 all the way down to 50. We bottomed out in April. Now remember, the market just barely bottomed out. And some of the trades Darren took you through were a great indication of stocks that bottomed out a long time ago and have actually been working their way higher. Like I said, the market bottomed out just last week or the week before. This thing has been going up since the middle of April, and we came into this range of consolidation, and you can see we broke out nicely to the upside. We've got resistance right here, but once we get through that, you can see that we could potentially even be up to the 61 area. So how do you play this? I'm loving the diagonal call spreads on this one. So buy the July 55, sell the June 60. That's going to be basically a 3-week trade. And if it can get up above 60, that's going to be a really nice gain. If it hangs out in this area, you're probably going to make a little bit because this is a positive theta trade. I do like this one on Masco. If you want to be just more vertical, just directional, go for the 57.60. In financials, we chose FBP last week for a sideways trade, and it was not a good performer. Now look, the stock was a fantastic performer. It was up 11.46% in the week. We were playing this with a butterfly that it wasn't going to go anywhere. So that is why we always position size these butterflies for max loss, because you can get these kind of really extreme moves that just kill a butterfly. It just absolutely is the worst thing to happen to a butterfly. So let's take a look at this week. I found so many long setups, and I told myself, okay, well, Rob, you can't just be 100% long. You've got to be carrying some bearish positions just in case. It was hard to find, but this is the one I do like. This is Marathon Holdings, and this is a crypto company. I am very bearish cryptos. Even though they've had a big fall, I still think there's more to go. This stock has bounced like 25% over the past 2 days. That's a big, big move. But I'm going to be very chicken on this. Very, very chicken. So if you take a look here, I'm doing the 10-11 bear call spread. I'm probably going to get in about 35 to 40 cents in a credit. That means I've got about 60 cents of risk. It's the wimpiest play you could possibly make on this because I don't think the market's going to go lower, but I do need to carry some bearish things. So I'm going to do some very wimpy bearish trades. So I like this one in the crypto space on Marathon.
Yeah, consumer. Last week we had Foot Locker. It was a good performer. It was up 5.5%, so that was a good one. And we're looking at international paper again. We looked at this several weeks ago, and that's a great thing about using a screener. Rob and I have talked about this before. If you've got a watch list, you are in the dark ages. Use a screener, please, because I don't look at international paper. It's not going to be on any of my watch lists. But then when you're using a screener, stuff like this shows up, and it showed up before we made money on it. It's showing up again. Let's make some more money on it. So this is looking pretty good. We're in that, a nice high base for about a month and a half right there. And we just broke out on Friday. Got a little bit of resistance up towards the 50 level, about $1 away right there. And that's fine. So what I'm looking for is something like that, like the other trade we did, long those June 47s and short next Friday's 50. And, it goes up to that 50 level, and I'm happy right there. Actually, I'd be happy if it closed at 49.95. But, up in that level, I'm happy. I can take a look at it. I kind of have the confirmation I'm looking for, test drive it for the rest for this week, and then drive it for the rest of June. So I'm liking international paper to the long side right here. In technology, last week we had Shoals, SHLS. We were long that, and it performed for us. It kind of underperformed it, but it was decent, up 4.9%. This week, what we're looking at is AMD. We're going to play this one sideways or bullish. This is right at a pretty good strike. It's going to be a targeted butterfly, a little bit to the upside. So we're going to go 110, 100, 110, 120 out for 2 weeks, out to June 10th right there. Now, when you're playing something like this, as soon as the price action gets up to that 110 level, that's the time to exit the position. If it's got that type of momentum, don't try to hold it to the close to rip as much theta out of as you can. You've had your move, take your profits and go on. So as soon as it gets up to that targeted level at 110, just get rid of the position. I don't know. In my earlier days, I would have held on to these, trying to eke every last penny out of it in theta, and it's not been good. So when it gets up there, especially in targeted butterfly, just get rid of it and let it go.
In the materials sector, last week we had Dow Chemical, and the chemical stocks had a great run, and they forgot to tell Dow about it. Dow was only up 1.4%. So again, it's a bullish trade. The stock did go up a little bit, but compared to what some of the other stocks in the sector did, it definitely underperformed. This week, I've got another short here. And again, it's very difficult to find short trades now because the weakest stuff have had really big bounces. And on Friday, they close at their highs. So nothing to me, I don't want to take a look at any bear rallies here to try to sell these because I don't think the rally's over. So finding shorts were actually quite difficult. And I came across this one, CF Industries. And this is a fertilizer company. So this one is below moving averages. It's really stuck in this range. And what I really like is that look at what happened when the market rallied Wednesday, Thursday, Friday. What did this thing do? It fell. This is an inflation play. And again, if people believe inflation is peaking, this is likely to head lower. But you can see here, we've got a whole bunch of support right in this 90 area. So right in 90 area, a whole bunch of support. So I don't think you can just go directionally short on this. I think you've got to play this with a spread. And I do not play diagonal put spreads often. I just do not play them often. The risk graphs on a diagonal put spread are just not as good on a diagonal call spread. And a lot of times what happens is you get this dips back down below the line. But I'm looking at this and saying, I don't think it's going to break this week. But I want to possibly set up for a break of this support at 90, maybe in 2 weeks. So I can get into a diagonal put spread, and basically, as long as it hangs out between 90 and 95, I'm going to be very happy, and then I can reevaluate this one on Friday when the 90s expire, say, okay, what do I want to do? Now look, if it plunges down to 85, I'm still probably going to have a profit. Probably somewhere around 78 or 80 is where this is going to dip down to where it's no longer a profitable trade. So I'm basically saying, look, I'm playing this from 95 down to 78, somewhere in this area. I think it's going to be over the next 5 days. So that is trade on CF Industries. And in energy, last week we had PBF. Now, I had a couple traders send me an email, say, hey, Rob, you had the chart of PBF and you talked about PBR, which is Petrobras. PBF was the trade and it was up 6.9%. So a nice move in our energy trade. This week, we've got Vertex Energy. Had a huge run up. Now, again, it had its big run 2 weeks ago, and it's just been resting. Now, the energy sector had a nice run this week, but this one didn't participate because it had needed to rest from this big rally. Big question is, when is it going to make its next move higher? We have no idea. So this is where diagonal call spreads work really nicely because you get paid to wait. You get paid to wait. So this one will be the 12th of July, the 15th of June, and you get to wait. And the nice thing is, if it just hangs out in here, this is a positive theta trade. You are going to make a little bit of money. And then if it breaks out and runs, then it's also very profitable. So this is a trade here on Vertex Energy on the long side. That is it for trades that we have for you. If you want to share more trades, please go on to Maverick Trading, log into the members area, and chat it up with the rest of our traders here at Maverick. All right, well, let's wrap this up. So we've had this massive relief rally. How much gas is left? We were very bearish. VIX was up to 34. Last time we got a 15% rally in the tech and about an 11% rally in the S&P. This happened back in March when we got really oversold and when the VIX got to 34. I'm not calling for that big of a rally, but I think we've got more than 6% off the bottom. I think we get into the 8, 9, 10% rally off the bottom. So I think there's a little bit more gas left, but you have to still recognize that we are not in a growth environment. Back in 2020 and 2021, we were in a growth environment where things were growing, where companies were expanding, companies were doing all these things to make business bigger. Now we're seeing companies start to retract and say, hey, let's tighten up our belt a little bit. Let's do this. We're no longer in a growth environment. And markets have a very difficult time going higher in this environment. So we're just no longer very bearish, but we are by no means bullish. So if you are going to be bullish, keep those trades short term, because at some point this will run its course, and this is still a bear market until we are proven wrong. So keep them short term. This week we are going to be doing something a little bit different, not just this week, but for the rest of existence until we change it again. We have been doing live sessions online since 2007. So for 15 years, we've been holding 4 or 5 classes a week. And during that time, we've been doing a lot of educational stuff. Like, okay, let's talk about the stochastics indicator. Let's talk about Elliott wave theory. And the way that things have changed over the years, we used to have like 2-hour live classes. They were crazy. We would just go for 2.5 hours of live classes talking about trading. And what has happened is people have a different way of learning now. And things are now broken up into 15 to 25 minute smaller packages to where they're more easily digestible. And so all of a sudden, our live classes that we've been doing don't make a lot of sense, because we've been coming on, doing a live class, and then recording it, and then that becomes a video. Well, we can make better videos by not doing live classes, because we can use a lot more techniques and do a lot more editing and stuff like that. So we're really going to be focusing more on doing strictly videos for our educational content and probably not having any live sessions, but we still love our live sessions. So what we've decided to do is we are going to decide the Friday before the week, what are we going to talk about next week? And we want it to be topical. We want it to be topical. We want it to be on, okay, yes, we've got all of our videos for all of our education for how to learn this and this and this, but we want to be meeting live with our traders talking about what's happening now, what's happening today. So we are going to be doing this for the foreseeable future. We are not going to be holding any more live educational videos or classes. We're going to be doing all topical stuff. And on Tuesday, Corey wanted to teach everyone how to trade the oil move. So show up on Tuesday. You can ask some questions, interact. He will record it. So once it's recorded, we will throw that recording up on the website. And then, of course, as usual, Joe's midweek update on Wednesday. So that is the schedule, and that's what we're going to be doing really until we change it again, until it becomes outdated and we figure out something else. I want to wish everyone a very happy Memorial Day and a very safe Memorial Day. And, it's during these times where I think it is prudent for us to just stop and say thank you for all the people that we honor this day for. Anything you want to add, Darren?
No, you covered it. Go out there, be safe. Remember the people that made the ultimate sacrifice for their country. And good trading, everyone.
Goodbye, everyone.